Hi and welcome to Carnegie and our interview with Ependion. I got with me Jenny Sjödahl, who is CEO for Ependion. Hi, Jenny.
Hi there.
So you released earnings end of last week, and puts and takes, I think. Order intake came off somewhat from the 500 million krona level. If we start there, you've seen around 500 million krona for the past 4 quarters, and now it came off a bit. How would you describe the market and maybe most of all the direction, and especially sequentially?
Yeah, we see a continued weaker demand out there. Our customers are still being cautious about investments, I think due to the high interest rates, and that pattern is continuing now into this quarter. The fact that this quarter is somewhat lower than the previous quarter, I see more as an effect of a lot of the European countries having their holiday season in this quarter and so on. So I don't see that as a further downturn, if you put it that way. It's more a seasonal pattern that we have seen now, I think.
Yes, you would say that the underlying is still around the 500, so it's kind of stable from previous quarters.
Yeah, I think so.
Okay. And then if we keep on with the margins, so gross margins improved 1.7 percentage points in the quarter. What was the driver behind that?
Yeah, I'm very pleased to see that actually. And even though both business entities contributed, which was positive, it was mainly driven by Westermo's gross margin increasing significantly. And that is actually due to a couple of things. First of all, that we are seeing the effects of the very high component costs that we had in 2022, 2023 and beginning of this year fading off somewhat. So that is positive. The other factor is that we have been managing prices in a good way in the organization. And then finally, also we have adjusted the cost level in our production sites due to the lower volume. So it's a combination of factors, but I'm very pleased to see that development finally happening now.
And if we continue on that note, because gross margins were up, but you saw quite a big pressure on the EBIT margin. And we've been talking a lot about the leverage in the business with gross margins over 50%. Is it purely the leverage here, or is it anything else? We do have FX, which is pushing a bit, but is it purely the leverage effect that we're seeing?
Yeah, apart from the FX effect that you mentioned there, it is actually a leverage effect. We have been coming down in terms of overhead costs as well to mitigate the downturn in volumes. But of course, it's not possible for us to mitigate completely this operational effect on the EBIT without hurting our organization in terms, especially the R&D side, too much. So I think we've done a decent job in protecting the margin while still doing important investments for the future.
Because development cost was 14.5% of sales in the quarter, which is quite high. And I mean, I assume that you will obviously continue to be at a high level because the business require that. But is it extra high because of X3, the X3 launch?
Yeah, I think there are two effects here. The X3 launch is definitely one of them. The level of R&D activity in Beijer Electronics is unusually high this year and last year due to this development of the new generation. The other factor is, of course, that the volume is coming down, so the percentage, of course, goes up. But in Westermo, there's so much exciting development going on, which is, related to customer opportunities. So it's very important and right for us to continue with that development. And that has an effect, of course, on the R&D percentage, which in a normal case should be somewhat lower than what we are seeing right now.
Mm-hmm. Mm-hmm. And obviously, the leverage effect works both ways. So when volumes come back, you get leverage on in the other way, so to speak.
Yeah, definitely.
Yeah. And if we continue to do a little bit on Westermo, so the order intake here was relatively stable. Same question as before. How do you see demand for Westermo's products?
Yeah, it has been somewhat sluggish now for quite a while. I think that is due to the overall economic situation. Projects are being delayed. It takes longer, we can see, to close opportunities. However, we are not losing customers. We are not, losing business at all. It's more a general slowdown in the economy. And of course, the world has not come to a complete stop, right? So I still expect we are positioned in attractive segments. We are doing the right things together with our customers. So I don't expect this situation to last forever. At some point, we are going to see an increased activity in all our key segments, I believe.
Mm-hmm. And you mentioned especially weakness in the rail segment, and we come back to sales in a second. But regarding the rail segment, so you're seeing more weakness. That is rail sticking out?
I don't think it's sticking out particularly, but the fact is that we are still seeing effects of the component crisis, because that's completely changed the order and delivery patterns of our large rail customers, and that effect is still we are still seeing that. So in particular quarters that can still have an effect, but overall we see that our train customers have healthy order backlogs that they need to deliver on. They are winning new business. So I think it's more a temporary thing that we are seeing right now.
Mm-hmm, mm-hmm. And because you were also mentioning, I think, the high inventory levels with I was assuming that you were referring to the train OEMs have high inventories, which are hampering orders a little bit. Is that the case?
Yeah, although we don't have full transparency, of course, into our customers' inventory level, we do get signals from some sites that they have relatively high inventory levels. So that has somewhat an effect on the demand side right now. That's our view.
Mm-hmm. And looking at sales came off quite sharply. Is it just the lower order intake in previous quarters which is driving that?
Yeah, that is definitely one factor, but we also need to remember that in Q3 of last year, Westermo was delivering extremely high volumes to our large train customers. That was due to a late backlog that was built up during the component crisis. So it's not a really fair comparison level, so to say, because it was extremely high in Q3 of last year when we managed to get components and really start to ship out large volumes.
Mm-hmm, mm-hmm. And continuing with Beijer Electronics, here we saw orders coming off quite sharply. What was the driver of the order downturn?
Yeah, I think that what we are seeing in Beijer Electronics is an effect of the lower industrial production, basically worldwide, which is also an effect of, consumption going down, and eventually that has an effect on almost all industrial production. So that situation is continuing. We have seen it now for quite some time. It is relatively stable across segments and geographies now, that even though Europe is keeping up a little bit better than the US and Asia, but yeah, overall it's pretty much following the industrial production situation.
But you're also phasing out the display solutions business, right? From this,
Yeah.
is that a big part, or is it more mostly done?
I think that most of it is done, and we saw in this quarter a lower shipment compared to, for example, the previous quarter of display solutions. Most of it is done. There is still a little bit more to be taken out as well. And it's in general low margin volume that we are taking out. And as we are taking out volume, we are also adjusting our cost level. So overall, I think this is a very positive exercise for Beijer Electronics to really prune the portfolio and make sure that we focus on high margin products related to our focus segments.
Mm-hmm. And looking at the margin for Beijer Electronics, which has been troubling in the past. I mean, we were talking about sales coming off, but margins is keeping up. Would you say we're definitely at a new level in terms of margin for Beijer Electronics?
Yeah, I think so. We have been focusing a lot on stabilizing the situation in Beijer Electronics, and I think that we have come a long way in doing that. We have taken cost out, we have more stable gross margins, and so we are at a better place. Of course, there could still be quarters where there could be some different levels of margins, but I do see a much greater stability in that business now.
So you would say that gross margins are more stable than they have been in the past, and then it's the same kind of effect that we're seeing in Westermo in terms of you still get the leverage because it's difficult to get out of the operating leverage, but gross margins are much more stable.
Yes, I would say so.
Okay. And then you have a new family of HMIs coming out, the X3. Could you tell us anything about your expectations for this launch?
Yeah, we are very excited about this new family. It's going to be a much more modern family with increased functionality, especially in the cybersecurity area, and an increased flexibility for our customers. And the first part of the offering that is being launched now in the fourth quarter of this year is actually the X3 Web. And that product fits very well together with the Web IQ offering that we have in Beijer Electronics. So I really do expect that to open up opportunities for customers that are looking for web-based HMI solutions. And then as the year throughout next year, we are going to launch the rest of the X3 family, which is also going to open up opportunities with new customers that are looking for this new functionality that we can now provide. So very exciting times ahead, I think, for that new range.
And then the range as a whole is being progressively rolled out during next year.
Yes, correct.
And then finally, maybe, I mean, you wrote in your opening remarks in the report that it's becoming clear that 2024 is a transition year after very, very strong 22 and 23. And we are approaching the end of this year. What is your focus as we enter 2025? And what are your thoughts generally about the coming 12 to 18 months?
Yeah, given the circumstances, I feel confident that we are doing the right things. We are investing in important growth initiatives going forward, and maybe the most important one now in quarter four is to finish the establishment of Westermo India, which is a big deal for us, which is going to open up opportunities, as well, of course, as the X3 launch that we just talked about. But in general, I think that as a group, we are well positioned in markets that are bound to grow thanks to structural trends. And so I feel confident midterm about our future and about our growth opportunities and reaching the financial targets that we have set for ourselves. So overall, I'm optimistic.
You would say that you are financially also cost-wise in a good shape, and it's just the volume part which is missing for you to kind of take off in terms of the margin and reaching your targets.
Yeah, I think so. With the gross margin improvement that we have seen now, we are in a good place, and volume coming back will definitely have a very good effect on our bottom line.
Jenny, thank you very much for coming and talk to us, and speak to you soon.
Thank you, Markus.